Great question. So, prediction markets, I think personally, is the most exciting and interesting innovation in finance since I've joined the industry. That's aside from the sports betting and the how many streams is Taylor Swift going to have type of markets on the platform. The thing that is interesting in finance is, will S&P be up or down at the closing bell? People can use that as a hedge in their trade. The KPIs of a company, right? How many deliveries is Tesla going to have of the Cybertruck in Q3? If you're long Tesla but want some downside protection, you can take the no of that market.
Hey, hey, hey! Welcome back to On the Fringe. I'm Gavin. I'm here with my good friend Dave, and today we're talking to Andrew Lebbos. Uh, Dave, you
hmm
wanna you wanna talk to Andrew?
Yeah, I do. But first, I'd like to introduce him to our audience. So we're ecstatic today to be talking with Andrew Lebbos, the Senior VP of Licensing at Benzinga. If you guys haven't heard of Benzinga, it's similar to Morningstar or Yahoo Finance way, way, way back in the day. These guys provide financial data and analysis to individual investors and to financial institutions. Some of the companies that these guys work with and they provide data to are JP Morgan Chase, Fidelity, Webull, Bloomberg, and also going to be talking today to Andrew about Benzinga working with Kalshi. So a press release just came out recently that Benzinga is going to be providing data to Kalshi. And prediction markets have really grown in the last 4 or 5 years. Kalshi is going public and they just got $1 billion in their Series F funding, which is crazy. And they have I think it's a $40 million valuation target for their IPO. They're up there with United Airlines, Campbell's Soup, Dropbox, some of these huge companies. So
40
Andrew, just
billion.
40 billion. Sorry, mistake. Oops, that's a big, big blunder there.
I should
Um,
have made a bet on it.
you should have. That should have been on Kalshi. I don't know. We can throw that up there, Gavin, potentially. Will Dave make a blunder in this and see what people say? But before we go, Andrew, how big has the impact been from prediction markets in finance?
It's a great question. So, prediction markets, I think personally, is the most exciting and interesting innovation in finance since I've joined the industry. I think a lot of people agree. That's aside from the sports betting and the how many streams is Taylor Swift going to have type of markets on the platform. The thing that is interesting in finance is, will S&P be up or down at the closing bell? People can use that as a hedge in their trade. The KPIs of a company, right? How many deliveries is Tesla going to have of the Cybertruck in Q3? If you're long Tesla but want some downside protection, you can take the no of that market. There's a ton of financial implications that are above my head. Like I'm not like a trained trader, but these hedge funds are already starting to use it as a way to amplify or hedge traditional trading strategies.
I mean, it essentially opens up to whether a company based on one product. You could say, okay, even yesterday, SpaceX was supposed to have a launch, and I looked, and it looked like there were bets on there. Yes, is it going to go? No, is it going to go? Or how many launches is the company going to have? But this is going to just completely open up trading in a whole nother world from what it looks like.
I agree completely. And I mean, even for myself, right? Like I'm a perma bear, which I'm working on. I always like I'm so bearish on the market all the time. I've missed a ton of opportunities um in just buying and holding long term. That aside, like if you can be a perma bear, like I could be against the general market, but I could think that Spotify is going to increase their subscriber count in the next quarter, and then I can be involved in the market now without getting exposure to the general market. It's opening up so many different ways to get involved in a company's upside in a more targeted way.
I mean, so from a retail perspective, I mean, we've just talked about the possibilities. What are you seeing already in terms of how it's changing people's behavior when it comes to the retail end of things?
So we don't get trade flow data from
Hmm.
our brokerages. I wish we did. I would love to see if retail investors are taking these trades instead of traditional trades. I mean, the only way that we can follow the impact is on public company filings, and they're not super detailed.
Hmm.
So we know that prediction markets are super high volume and increasing month over month on platforms like Robinhood because of Robinhood's public filings, right? Like everybody has access to them, they can read them. But what specific bets or trades? I don't know. Like, is it all sports bets, or is it, is there any government type of macroeconomic trades that are happening, or is it KPIs? I wish that I could see the breakdown. And I guess one benefit of Kalshi going public is we'll be able to see more, there'll be more insight around what is
Hmm.
actually happening in this market, right? Like what segments of their platform are producing the most revenue. And then I think that we can actually see, like, you know, is it providing interesting value for investors, or is it an alternative to DraftKings?
Yeah,
I
and
think that's
to
a really good question. Go
that,
ahead,
that
Dave.
is, and say on that same note too, that's going to bring the SEC in for regulating. I would imagine what's going to be happening on the platform, especially if you have contracts that are being traded or bet on. And I mean, right now, we've talked about this a little bit in past podcasts, but there's not a lot of regulation for prediction markets. And the CFTC is trying to essentially protect users that are on these platforms, but it's a very small government agency and they don't have the bandwidth, they don't have the people to actually go through and police these things. So, do you think Kalshi going public, I mean, will that make it safer for average investors or institutions? And I'd say increase the likelihood that these do become very mainstream in, finance or across the United States for investing.
I think so, for sure. I mean, whenever a company goes public, there's higher amount of scrutiny and transparency into what is happening, behind the company's closed doors. I think the CFTC is doing the best they can, right? Like, this is such a monumental shift in the way that people are doing things, and then there's so much buzz and so much money flowing through this new. To be fair, like, it's not new, right? There's been, like, I mean, I remember in 2019, there was this site called Predict It. I'm not even sure if it's around anymore, but we were betting on, like, not me because it was illegal. A friend of mine was betting on, like, who's gonna win the election, or
Yeah.
like
Mhm.
who even they're even doing, like, the what words are they gonna say in the election. And, like, we were in the Benzinga office and I saw a friend having fun with that. So it's like these have been around. But now it's like, okay, these are legitimate. And then going public, like, I think that even the perception of, like, going public legitimizes Kelshi and legitimizes prediction markets as a part of our society. So I think it's a good thing that they're going public, personally.
Yeah, it's certainly with such a monumental valuation, well, you're now on par with these giant companies. I mean, not only are they going mainstream, they're becoming very central very fast. And the shorter long-term implications, for someone who doesn't know anything about prediction markets or maybe has a vague idea of them, what do you think the implications are for someone interested in finance over the next, I'm just going to say 5 years. Normally I'd say 10, but like ten's too long. In the next 5 years, again, you don't have the data. I'm not going to hold you to anything, but anecdotally, what are you hearing? What are you seeing? Where do you think any of this goes in the near future?
That's a great question. I'll say, let me preface this with, like, I just talked about this on another podcast, and we were talking about Bitcoin in 2019, and we're like, where's this going to go?
Hmm.
And there were two camps. One was Bitcoin is going to be the currency worldwide. Everybody's going to use it. The US dollar's dead. borderless payments, right? Like it was like a almost like a monetary apocalypse situation. And then the
Hmm.
Yeah,
other is Bitcoin is going to zero, it's fake. There was no middle ground. And like
they were
2025,
both
2020,
wrong.
yeah, exactly. Like, but 2025 felt like a million years away, right? Like by 2025, Bitcoin is going to
Mm.
be zero. There's like articles about it. And now we're in 2026 and you can get exposure to Bitcoin through a Fidelity ETF, IBIT in your 401k. Like
Yeah,
if that was on Predict It back in 2019, I would have took the no of that bet. You know what I mean? Like
yeah,
there's no world where we would have thought that, Bitcoin miners would be public and there'd be 10 different ETFs to choose from. So like the way that the market shakes out and finds equilibrium and like solves for itself is pretty amazing. And so I'm sure that it'll happen in prediction markets. But that's not, I didn't answer your question, did I? The question was how, like, someone trying to get into finance in the next 5 years. So, like, one thing that is just crazy food for thought is I have a little cousin. His name is JJ. He's great, super smart, going to college soon. He turned 18, and the first thing he did was sign up for Robinhood. The second thing he did was sign up for Kalshi.
mm.
And
Wow.
I mean, I like first thing you did is sign up for Robinhood. I think that's really good. I think that like if you're investing long term in a smart way, and like 18-year-olds kind of have a leg up on us on this call, right? Like we're all millennials. Our heyday of influence is shorter than the 18-year-olds' heyday of influence. Like the 18-year-olds see what is next in society, who's buying what, like what products these younger folks are using, what they prefer, and if they buy and invest in those products long term, that's a really good way for them to build long term wealth, right? Like when I was 18 and I saw everybody switching from Android to iPhone, I thought about buying Apple stock, but I had to pay for college, so I couldn't. But if I would have, I wouldn't have student loans right now. So like, I think that like the young folks are exposed earlier to the financial markets. I think if it's used in a responsible way, it helps tremendously in their life. I think that there's additional education needed. But yeah, I don't know. I'm rambling. We can cut that. You guys can cut that out if you'd like. But
No,
No,
um,
it's
why?
good.
I mean, you're
It's good.
answering the question,
Yeah.
man.
okay, fair. Thank you. I like if I were to give advice, and this is not financial advice, but if I were to give advice to someone trying to get involved in finance over the next 5 years and build wealth for themselves, I would say keep it simple. Like I think that a lot of people try to get too
Mm,
advanced with it. Like these advanced trading scenarios that we've talked about on Kalshi are not for the mass majority of people. They're for like super advanced traders, and like advanced investors. The majority of people should not be hedging their investments. They should be buying passive ETFs. You know what I mean?
Hmm.
yeah.
It's fun to follow the market and it's fun to read the news and keep up with it. And it's good to know what's going on. It's honestly, and it's actually like a really strong conversation point to have in your life. I think it's important to be well rounded. Like you should know about the World Cup because everyone in the world is talking about it. And you should know about the financial markets because everyone's retirement depends on it. And so it's like good for your career to understand and know the markets. Like not everybody should be day trading. You know what I mean?
Yeah. I've
Definitely.
heard
Yeah.
if you are day trading, you're day trading for a while, and then there's gonna come a day where you don't have anything to trade.
Right. Like what 90% of people blow up their account. And that
Yeah.
doesn't mean that 10%, like I have friends that day trade for a living. I live in Miami. I go to a poker game where three of the people are day traders and they do extremely well. There is ways to do it, but passive swing trading is oftentimes less effective than long-term dollar cost average. You know what I'm saying?
It,
Hmm.
and so I just want to piggyback off of what you just said. So I'm going to do on the one hand, on the other hand. So on the one hand, this is going to open up a lot of possibilities for people to be exposed to the upside of generating wealth in ways they may have not been before. But on the other hand, Do you think this is going to make people blowing up day trading in a more dramatic, explosive way in the beginning? Again, it might work itself out, but in the beginning, do you think people are going to have to be a little vigilant about this as an issue?
That's a great way to look at it. It's a great question. I guess it all comes back to freedom of choice,
Hmm.
you know? Like free will, I guess is the word I'm looking for. Like we all have free will, and it, it's just this now I'm gonna get like real ethical, like real philosophical, but like alcohol is bad in high amounts, right? Like we can all hop off this podcast and go to the liquor store and drink the rest of the day, right? That's bad.
Hmm.
But like
Mm.
Friday night with the family, glass of wine at dinner, some would say that's good, you know? Um, ability for an 18-year-old to invest in the S&P and let it grow over the next 7 years and pay off their student loans. I would say that's
Good.
good.
Yeah.
Ability for an 18-year-old to buy S&P mini futures with leverage, depending on their strategy, I don't know that that's good, you know? And
Yeah.
so like in the same so we talk about sports betting, right? Like
Yeah.
18-year-old able to bet $5 on the Lions game at Thanksgiving and their family all hoots and hollers and it's fun, right? Fun is good. Family bonding
Five
is good.
thousand bucks on the same
Mhm.
game after payday.
Yeah,
Exactly.
you're going to put your whole tuition for the next semester.
Exactly, right? That's
Yeah.
might not be good. So, but like, are we going to take it away? Are we going to put limits on it? Like, whose decision is it to put limits on it? It's like each individual
Well, I think
user,
I think
you
that's the
know?
Yeah.
question.
Well, yeah,
That's the
that is
question
Yeah.
of the next
that's
couple
the
of years.
$64,000 question. And going off on that same thing, I mean, you're bringing it up. With great power comes great responsibility.
Yeah.
And how are these platforms going to protect themselves from organized crime or corruption of information or people that have inside information manipulating the, I guess, bets or manipulating the contracts to where, I mean, this is not, specifically for you, but just pondering this thought because you have more American consumers and younger people that don't have the experience that are going to be using these platforms. Well, everybody's talking about, oh, SpaceX is blasting off. They've done really well in the last, 3 years, 4 years. Well, there might be something going on this next launch that's not being publicly available. And
Yeah.
there could be somebody that's essentially trying to manipulate and get people to put their money down and end up losing it. We've seen this with other stuff too, and intelligence and other things.
Teleprompters.
Yeah,
Uh,
teleprompters.
I should have gone into that business. Um, Seriously. But no, I think that's a great question in terms of again, just looking at the next 5 years, whether it's the platforms, whether it's different governments, how that regulation is going to evolve in different ways. Because again, it's an incredible opportunity, but opportunities can be good and opportunities can be bad, as we've discussed. And how exactly it's all going to shake out. I mean, I think you're in a greater position, Andrew, to see what's coming down the pipeline than a lot of people. And it still sounds like it's a little unclear.
Yeah. I a little bit of food for thought here is I will actually take the contrarian viewpoint on the insider betting on Kalshi and on Polymarket and all of these markets. These,
Hmm.
at least the good ones,
Hmm.
they're paying a lot of money and adding really good compliance and AI powered software to try and fix for this insider trading. Like they're trying very, very hard to solve for it, and people are getting in trouble for doing it and they're catching people. I don't know what's public, but like I know of a software company that is working with one of these prediction markets. And the software company is like a bunch of geniuses in a room writing algorithms to catch insider traders. Like it's pretty incredible what they're doing. So I think that these prediction markets are doing their best to avoid insider trading. 'Cause they want to stay around, they want to stay alive, especially
Well,
Kelsey's
yeah.
going public. Like they can't have government officials betting on actions, right? Like
Well, and
it's not
I
sustainable.
suspect that's why the stories are coming out now,
Mm.
because as they get closer to the IPO, they go, we need to be seen to be doing this.
Yeah,
Uh,
for
we
sure.
can't sit around. I mean, I'm sure there's a lot they don't want public, but at the same time, because it is a concern, okay, we need to be seen to be proactive. And I'm sure they are being proactive because it's a problem.
Yeah, for sure. Um, and it's becoming less of a problem though. It's happening less and less, because they're
Mm,
catching people. And I mean, I hope that that goes away, right? Like, I mean, in the stock market, I'm sure there's people insider trading still, but
oh,
like, if you
obviously.
compare it to Martha Stewart days, right? Like, it's a lot less because we have
Yeah,
AI
or
and they're
Enron.
going to catch you. Also, like,
Yeah.
we're using our online platforms that are very smart. If I buy the S&P every check and then all of a sudden I bet my entire bankroll on a naked call, I probably know something. You're gonna get a phone call.
Mm.
So don't insider trade, listeners. They're gonna find you. Um, but on the flip side of the like insider trade, like I don't think that insider traders are taking money from the 18-year-olds. I think that the big hedge funds, the market makers on these platforms, are the ones that are taking the money from the 18-year-olds and the 31-year-olds like me. Like I know that I'm losing these bets to Susquehanna, who's trading on this platform. Like they're smarter than me. They're doing it
Yeah.
systematically. They're doing it to make money. The benefit of them doing it is that there are markets to trade. Like without
Mm.
these big hedge funds, there's no one buying the no. There's only people buying the yes contract.
So they're
So
bringing liquidity.
Interesting.
they're bringing liquidity to the market and
Yeah.
enabling people to buy a long shot NBA MVP, Kate Cunningham,
Mm.
and lose $10. If they do that 10,000 times across a bunch of long shots, then they beat the S&P and a bunch of 18-year-olds lose $10. And so like they're the ones that are really winning on these platforms. Like Kelsey's just they're just a broker. They're just brokering someone who thinks yes and someone who thinks no. Like they're just enabling. I guess, and I'll add one more point. I was I was at a lunch in New Jersey and I was hanging out with like an old executive from Benzinga and we were talking about prediction markets and he was like, it's crazy. They're just putting what we've all been doing on an electronic platform. He's like, we used to be on Wall Street, down on Stone Street or whatever that like bar street is. And he's like, we would be at the bar and we would all bet $100 that this president would win at certain odds, or we would bet, $10 that the first NBA draft pick would be this player. And we would we've always been doing it. But now we can just do it in a more systematic way and pay 2% for brokering it. But now there's not going to be any bar fights about it. Like you don't know who the other side of the contract is. So if we look at it as like an electronified way of betting with our friends, like does that change what this is? I don't know.
Food for thought, definitely.
Oh, for sure. For
For
sure. I
sure.
mean, instead of, I guess, getting into a bar fight, you're going to be fighting your keyboard and punching your monitor and
Yeah, or your bank, depending on how
your
much you bet on
bank.
that.
Yes.
Yeah. Oh,
Man.
well, gosh, thank you so much, Andrew. It's been great talking to you today. And a lot, a lot of ground was covered, I feel like. Um,
Yeah, it was
but
very much a
yeah,
whirlwind.
it was. And man, I hope we can have you on again at some point. This is part of our rolling coverage, of course. But yeah, just thank you for sharing your knowledge about this and just being great to talk to. And hope we can do it again sometime.
Absolutely. Thank you both for having me. Happy to come back on. And I will preface these are my takes, not Benzinga's, and not financial advice either. For all the listeners, but I appreciate all the listeners and I appreciate this conversation.
Yeah,
Awesome.
and we would appreciate it if you, listener of the podcast, would give us a quick rating on Apple Podcasts or Spotify if you're listening on there. We really appreciate it. and we are always here for our growing On the Fringe community. Shoot us an email if you have any thoughts about prediction markets or about this episode or for future episodes or content. And Gavin, with that, I think it's time to do something, but I can't
I think
remember
it
what time it
is.
is.
Well, Dave, I think it's button time.
It's button time? I should have put a bet on that. I had a feeling you were going to say that. All
Hit the
right,
button.
here we go.